Hey, Courtney Smith here. Just want to give you an update on my strategy on gold. The chart here shows the GLD ETF, which is 100% physical gold. It's got all my various indicators on it, so it's a little bit confusing of a chart. But the key here, of course, is this is the price action, and this is today's price action as I record this at about 1 p.m. Generally speaking, from a fundamental point of view, I'm very bullish on gold, and I look for gold to double in price over the next couple of years. The main reason is that inflation is going to be extremely high because of the massive increase in money supply. The U.S. government is also going deeply in debt with their multi-trillion-dollar deficits, and there's no way that they can tax enough in order to get the money to pay that back. So that what's going to really happen is that the Treasury and the federal government, no matter who's in power, whether it's Democrats or Republicans, will in fact start to expand the money supply in order to debase the value of that debt. In other words, if they have to pay back dollars, they want to make sure those dollars are worth less. They will effectively print money to pay back that debt, and that will lead to higher inflation. Gold is an excellent long-term hedge against inflation, so it probably belongs in everybody's portfolio in some degree or another as an inflation hedge. But as a trade, I also like it from a fundamental point of view for those reasons. Technically, the situation's a little bit it's a little bit different of a situation. Let me switch over to a weekly chart here. So take a second here. And to give you a little bit of long-term perspective, of course my computer's working very slowly here. Come on, there we go, we're coming up. It'll be here in a minute. It's on a coffee break. Okay, this is the weekly chart, which shows we had this tremendous run up, a tremendous drop down. Remember, this is up at $1,000 an ounce. We dropped back down to $700 an ounce. We just got back up to 100 and failed. And this is one of the most negative things on the chart that I can say is this failure to make a new high here. And usually when a failed signal is a signal. So that's the one thing that makes me nervous about the whole scenario, is that one technical indicator. Let's go back over to the daily to be a little bit more precise. Right now, I am long GLD. I'm long IAU, which is another ETF that's 100% in gold. My stop loss is under these lows right here, down around 85. Remember, this ETF, it's 1/10 the price of gold. So when it says 85 here, that means the price of gold is 850. Right now, we got a small breakout over these highs here. That's a bullish sign, so I'll be happy with that. And hopefully that'll get us back up into this area. However, my feeling is that we do have to break the $1,000 level, these old highs, sometime in the next 6 months to really validate and confirm that this is a bull market. Our other indicators down here show good strength. This one shows, however, the ADX is showing that the market is not in a trending mode, but is in a sideways mode. That's pretty easy for us to see. So right now, I am long. My stop is down here. I received confirmation that my long position is a good idea from breaking these highs. The next hurdle that I would see is I'd like to see it break the 20-day high, then the 55-day high for continued validation that this is in fact a good trade. Talk to you later.